Happy Wednesday. Happy New Year, everybody. I'm Renita Young, and welcome to Your Money Story right here on my page. So today we're going to kick off this year's programming with talking about investing. Now, I'm going to invite Jacqueline Schadeck on in a few to talk. She's going to tell us how we can craft an investment strategy that's right for us. So hang on for a moment. Let me grab Jacqueline.
Good morning. How are you?
Morning. I'm good. How are you?
I am great. Thank you so much for joining. I love the brick wall, curly hair. Everything is lovely.
You. Can you guys hear us? Because Renita, your sound went out right before you pulled me on. Can
And
you
what
guys
about right? Yeah,
can you
can you guys
guys
hear
give
us?
us some hearts? Give us some fireballs if you can hear us.
Mm-hmm.
Sound check. Mic check.
Sound check, mic check. I see one person put something. Yes, I see some hearts coming in so people can hear us well. Excellent. Thank you so much. So, we talk about what led you to go into personal finance first. We start with your money story. And so, you do have this strong passion to help people understand money well, but it came from somewhere. So, what was your relationship like with money growing up?
My relationship with money was, for me, it was one of abundance, right? I never wanted to be without less, even though I grew up with not a whole lot. So, what happened with me is I grew up on a 1,000 acre ranch, okay? And it was property that had been passed down for generations. And the long story short is that the property was sold out from under us. My grandfather passed simultaneously, and so my mother inherited $1.4 million. She then lost $1.5 million due to poor financial advice. And
Wow.
because that happened, I was like, there's got to be somebody out here who gives good financial advice, right? Who's fully
Mhm.
educated on what happens with the economy, right? How to
Right.
invest in the stock market, how to build a retirement plan, right? Simple things like how to budget, how to understand health
Hmm.
insurance, all of those things that our advisor didn't do for us. So I came across the certified financial planner designation and I was like, oh, that's somebody who knows about all of these things, right? And so I was like, that's what I'm going to do. And here we are 8, 10, 12 years later. It's been about 12 years since I had that first thought. And I've helped over thousands of people have a financial win in their life. And it feels really good.
That's excellent. And I mean, what a lesson to get early on in life just to see that happen. And I'm sure, that definitely shaped how you budget and how you help people, everything like that. And so you made that shift, which is great. And you started to get more information on how you personally can invest and you can grow your own um, income. And so today we're here to talk about that, crafting your 2022 investment strategy. And you say the very first thing people need to do is develop clarity. They need to establish some sort of clarity. Are you talking about what they want or about where they want their money to go?
Yeah, people really need to develop financial clarity for what they want for their life. Okay. I just tweeted this out yesterday. I said, a lot of people forget that the goal is to spend your days as you wish. The goal is not to have a lot of money, right?
Mm,
But sometimes you need a lot of money to live the days like you want to live. So we first have to get clarity on what it is that you're trying to do, right?
mm-hmm,
So I think that a lot of people need to start their clarity with their budget. Review where you are right now, okay? And I know a lot of times budgeting sounds like this big, scary word, but I promise you it's not. It's just a reflection of where you are right now. And we're beginning a new year, so everybody is doing this, right? I'm sure you have taken a look at what happened for you financially in 2021, and then
Mm-hmm.
you're planning for 2022. So it's just really important that you start with looking at where you are. And I tell a
Mm-hmm.
lot of people because they get turned off by the word budget, right? They get scared,
They
they get a
do.
little anxious. Nobody wants to hear that word. I don't even like using that word. I prefer to talk about your cash flow plan. But
Mm-hmm.
I tell people there's only two reasons to have a budget, okay? The first one is financial discipline. I want you to be financially disciplined, okay? And in order to be financially disciplined, we need to execute a budget, all right? Because we've got to know what's coming in and what's going out. That's the first reason why you need a budget. Financial.
Yep.
And the second reason to budget, which is the sexy part of what we're talking about today, the second reason why you need a budget is so that you know how much money you can invest. Because the only way that you're going to build wealth is through investing. All right. You can't save your way to wealth. You cannot, you know, follow any other kinds of random methods. Like you have to invest to build wealth. So I
Mm-hmm.
need you to have a budget so that you're exercising financial discipline and so that you know how much you can invest every month.
Absolutely. And so when people look at that, when they look at different fund accounts, how would they start with this strategy next?
How would they start with getting their investment accounts full?
Correct.
All right, so that's the goal, right? So a lot of people are thinking that they're not investors yet. But the truth is that you are an investor through your 401k. Anybody listening have a 401k, a 403b, 457? They're all kind of the same category. It's an
Mm-hmm.
investment account that is attached to your employer. Does anybody have one of those? Drop some fireballs for me if you have a 401k or 403b, right? Because you are an investor.
Mm-hmm.
So you are
That's
already
important to note because some people don't consider themselves an investor. Right. Some people
mm-hmm.
don't, but that's an important thing to note that you already are one.
You are an investor through your
Mm-hmm.
401k, right?
Mm-hmm.
And so of course your employer takes some responsibility there for how you are investing those dollars, but it is important that you understand that at the end of the day those are your dollars. And more importantly, at the end of the day, it is your responsibility for your retirement. Okay? We have made a
Right.
shift, and I don't think a lot of people have picked up on that shift, but we made a shift from your employer having the responsibility for your retirement, right? And what I
Mm-hmm.
mean by that is we all like to talk about the pension era, right? And our parents had
Exactly.
a pension or our grandparents had a pension, right? And so they were getting that steady money every month during retirement. And then they coupled that with Social Security and they were living a better life in retirement than they were when they were working. And
Mm-hmm.
so that's not the case anymore, right? Pensions are not very common. And so what that means is that there's been a shift. There's been a shift from responsibility on retirement from the employer to responsibility on the employee. And that's you, right? You're the employee and you have to take responsibility for your 401k investments, etc. So you can begin investing with your 401k. As of 2022, you can put up to $20,500 into your 401k.
Mm-hmm.
Those are elective deferrals, okay? That's just a fancy term for what you defer from your paycheck, right?
Mm-hmm.
So you can put up to 20,500, and that's not including what your employer matches. Okay,
Correct.
so you're putting in over, you can put in over $1,000 a month this year, and you're going to get a tax deduction for it. No matter what your income is, you will get a tax deduction for that $20,000 that you put in. So that's a really, really
Excellent.
great way to start.
That's a good way to start. Really good advice there. And so, for the person who wants to go a step further, um, do you suggest starting out with individual stocks or with index funds? What's your strategy when you want first time investors to try their hands in investing?
Good question. Good question. So, first time investors need to understand account types first because account types are the difference between paying $1 million in taxes over your lifetime and, you know, $250,000 in taxes over your lifetime, right? There's a really big difference there. So if you can understand tax planning, you can understand which account types you need to use, then you're going to be that much further ahead, okay? And let me give you guys the example so that it's making sense for you. But we know that retail investing tripled during the pandemic, right? And so what we had was a lot of Robinhood users, okay? And so Robinhood users at the end of 2020 were complaining about tax bills. They were like, wait, what is this? I didn't sign up for this part. Like I signed up for this, but I didn't sign up for this tax bill. Right. And they didn't understand why they had a tax bill. And they had a tax bill because they didn't understand the account type that they had opened up, okay? So what happens with Robinhood is they only offer brokerage accounts. And if you have a brokerage account, you are subject to capital gains taxes that year. So if you made a profit in your account, you will pay capital gains taxes. If you had a loss in that account, you will be able to file a loss on your taxes, okay? So understanding how the brokerage account works from a tax perspective and from your ability to access that money without penalty is very important. So before I even get into people with like, oh, pick these stocks, pick this, I need you to understand your account type, all right? Does that make sense? I'm hoping I'm explaining that properly. Okay.
It does make sense. And
Perfect.
So this is one of the things that you help people understand in some of your various courses. But you also have a New Year, New Money challenge that you started. So tell us about that.
Yeah, so the New Year, New Money Challenge, the tickets are available now. It'll be January 10th through the 12th. It'll be for 1 hour in the evening, 8 o'clock p.m. So for those who are serious and not curious about crushing their 2022 money goals, the New Year, New Money Challenge is for you, okay? This is what's going to help you financially transform your life and take your money to the next level. Doesn't matter if you've already started investing and you need a little bit more clarity, or if you have not started at all, this is for you. So I'm super excited to bring you guys this New Year, New Money Challenge. This is my first time doing it. I've gotten some really good feedback so far, so I've made it every year. But you guys, success loves speed, okay? Success loves speed, and it needs you to take action now, not later, okay? Let time be an ally to you and not an enemy. When you're investing, you need time, right? Time in the market is so much more important than trying to time the market. So I need you guys to hop in this New Year, New Money Challenge. If you click the views up here, you tap on that, you can follow both Renita and I. And if you go to the link in my bio, it's the very first option, the New Year, New Money Challenge. I can't wait to see you guys then.
That is excellent. Thank you so much for sharing that. And so people can find out more about Jacqueline, the New Year, New Money Challenge, as well as her book over at Jacqueline Plans. And I'm Renita Young, and this has been Your Money Story, folks. We love to talk about money. We love to talk about maintaining wealth and growing wealth. So if you guys have any questions, any ideas for show topics, feel free to inbox me. And hey, Jacqueline, thanks for joining, and I hope you have a lovely day.
Yeah, you have the same one, Renita. Wishing you the best. Happy 2022, everybody.
Happy 2022.
Bye-bye.
Bye.